What is technical analysis? Technical analysis is the study or examination of historical market data and is a method used by analysts to predict future price movements and trading opportunities based on key factors such as past price or volume movements. Where fundamental analysts focus on economic factors such as a country's GDP, employment statistics, or significant internal news to make trading decisions, technical analysts believe that history repeats itself and base their trading decisions on the history and patterns in the movement of the price of a currency. The basic difference between these two types of traders is that fundamental analysts focus on why a price is changing, and technical analysts focus on the what that is changing, in other words, the supply or the demand for that particular currency pair. Technical analysis is performed using charts. The three main charts used to perform technical analysis are the candlestick chart, the bar chart, and the line chart, although the first two charts are generally used way more than the latter. There are tons of other tools technical analysts can get their hands on, including certain indicators that can be plotted directly on the chart and oscillators that can be used when there is no clear upward or downward trend in any given currency pair. Chart patterns can also be used by technical analysts. A chart pattern is a shape within a price chart that can help traders identify what a price could possibly do next based on what it did at some point in the past. It might seem complicated when you first start learning how to perform technical analysis, but after some practice and having identified which tools are right for your strategy, you'll be on your way in no time.